Okay, I want to bring in two big names here. Larry Hatheway, the chief economist and head of investment solutions for GAM, and we also have, is that how I pronounce it? I'm so sorry. GAM. Right. And we also have Pitcairn. He's the chief investment officer for Pitcairn, a family-owned firm managing $5.7 billion in Philly. Larry's got $122 billion, but hey, together we got a huge pot of money. Larry, to you first, give me a sense of what you think when you look at the swings today.
Well, the swings today, I think, are largely down to this moderation of the trade war talk out of the White House, really down to Larry Kudlow's comments. Larry is a respected figure. He's well known on the street. So what he said clearly sort of softened, as it were, the blow. I think it's going to take more than language, though, if this is going to be a sustained turnaround story.
Okay, so today we've got the turnaround. Rick, how's it playing in Philadelphia?
Well, I think there was a lot of fear this morning, and to your other guest's point, Larry modified some of that with his comments today, but I think that's sort of typical of what we've seen out of the Trump administration. The bark is one thing, and it causes fear in the market. And then what actually comes through in policy many times is something less and something more benign.
So when we look at the major point here, and that is we don't really know, but day to day it's been rather choppy. Larry, tell me what you are buying for your clients with all those assets under management.
So first of all, we're about to head into the first quarter earnings season, and after the turbulence of both February and March, there are a lot of stocks that are well off their recent highs. And a lot of them, I think, are going to demonstrate really strong earnings, in particular areas of tech, energy, given where energy prices are today. Probably some of the cyclicals will still come through. So we think it's going to be an earnings-driven market, and I think the earnings are going to give the market the support that they've been lacking from Washington and elsewhere.
Earnings and data, maybe that's what we shift to away from trade talk, Rick. And we are getting the March jobs report in just 2 days, Friday, and we are also looking certainly at a pretty good earnings season. I believe the S&P earnings are supposed to be up 18% year over year. What are you doing for your investors, and what are you telling them?
Well, our investors are families, and they're really looking for growth over the long term. So what we're trying to do is stay away from short-term fear trades and try to play the macro themes of the market. Certainly earnings growth, economic growth against sort of the backdrop of the changing interest rate environment is something that we think is going to dictate how long this bull market lasts. We've been pro this market since 2009. We've been allocated towards equities, and we think that has a ways left to run before this all comes to a period where you might want to reduce risk.
Larry, the closing bell's about to ring. One thing you would avoid?
These days, I would avoid fixed income still. We're short duration, we're short bonds, and we're short credit. We think equities are the place to be along with alternatives.